different kinds of expenditures based on public needs, and sometimes only the perceived public needs, not actual needs. And hence there is always a need to finance it, and borrowing provides a unlimiting or a source which is without any hard constraint, unless people stop lending to the government. But the government also has in its own control the interest rates, and it borrows at a high interest rate, which creates financial repression in the financial sector, because the credit will not flow to the private sector that in such an event when the government is paying very high interest rate to borrow from public. And this unbridled borrowing can result in crowding out of private investment, which is a known argument. And there is also a very large literature on financial repression, that the prices and the flow of funds, the price of funds and the flow of funds that the financial sector is generating will be geared towards the government entities and away from the private sector, and the financial sector will not perform its job perfectly and efficiently, and hence the financial repression. What are the alternative solutions? We view that Sukuk can provide an alternative solution. Sukuk and other Islamic financial contracts offer good alternate funding methods for public finance. Why they are good alternate methods? Because they are linked to the projects. They provide transparency and specificity of use. In case of other borrowing, the borrowing is of general nature. The government is borrowing for its fiscal needs. Those fiscal needs are very broad. It can be for payment of the salaries, it can be for construction of new toll roads, it can be for construction of some public parks, it can be for anything. But most of the products, the Islamic financial products that we can think of, they usually link things with actual economic activity, either in terms of kind or in terms of service. So in that sense, the debt cannot grow unlimited and without any bound, and financing is always directly linked to the project. It provides transparency and specificity of use, because you are raising funds for specific projects and you will be returning funds either from the returns of the same project if the project is revenue generating, and in most of the cases, in case of public finance, the projects that we are talking about may not be revenue generating. They may be public benefit projects. So in that case, the returns will be coming in the form of rent from other sources of the government, not necessarily from the proceeds of the project. Returns can be made fixed or flexible. This is another advantage of Sukuk, that it can be fixed rate or flexible to suit the appetite of investors. Not all investors are willing to. There are different range of appetite, a range of preference for risk and return, and each kind of investor can be satisfied, provided that we have provided them with various mix of return and risk options. Sukuk are safe from unbridled borrowing, as I just mentioned. They are in line with the ethics and norms of the society. If you are talking about Islamic society and Islamic finance, then avoiding interest, funding the government through means which are compatible with Sharia is in itself a positive development in the ethical sense as well as in the religious sense. It brings in untapped and diversified sources of finance which were previously not available, because many people who do not want to participate in the financial sector because of the element of interest or because of its non-Islamic nature will be forthcoming. Now, these are some of the benefits that we can talk about, and there are also some of the limitations that we can talk about of Sukuk. That one of the limitations is that you cannot borrow, the government cannot borrow without any countervailing asset, existing asset, or without creating a new asset or without creating a new service. This is a negative point as well as a positive point. Negative for the conventional governments, for the present day governments, because they would like to continue borrowing so that they can support very large public sector. The positive point is that the public sector will become smaller and will be confined to the real needs of the society, because when the government can borrow only for the real needs for which people are willing to pay, then this works as an automatic control. Now let's look at the Sukuk. This is one of the uses of Sukuk. Sukuk can be used by corporate as well as the government, but I was focusing in the first section that how or what are the advantages of using Sukuk for the government expenditures. If we come to the market trends and growth potential in the Sukuk, we find that this data is before the financial crisis, but we'll talk about the financial crisis and its impact on the Sukuk market as well after some slides. Sukuk market growth and potential since 2001, the average growth rate has been about 45% per annum on the average. Dubai-based, for example, US dollar 3.5 billion PCFC Sukuk generated orders of US dollars 11.4 billion, which were more than half of it was from non-Muslim investors. It was in January 2006. So the point is that Sukuk are not generating interest, attraction just from the Muslim customers, but also non-Muslim customers are also attracted because of the returns that they are offering and because of the risk, the lower risk. Because in normal borrowing, usually these borrowings are unsecured by the government or by the corporate sector, whatever. Sometimes a guarantee is put in. They may be collateralized, but in case of Sukuk, they are always secured by a real asset. The asset may be existing now or to be existing asset which will come in future. So because of the secure nature, they are more beneficial, and the rate of return that they are offering in the market is much higher. This is because of mispricing right now. Usually, if the Sukuk are marketed properly, they could be marketed at much lower cost. That is, they would be offering much lower rate of return. Even then, people would be willing to buy. But unfortunately, most of the Sukuk are offered for institutional investors like big banks and big financial institutions, and the offerers are themselves not sure how to price them. So we see that, and that is the reason, one of the reasons that we see that most of the Sukuk that have been issued have been oversubscribed. Why they are oversubscribed? Because there is large appetite. Why there is large appetite? Because one of the reasons is that some Islamic banks have large amount of unused liquidity, but the other reason also that when non-Muslim bankers and financial institutions are coming in, it is because they are very lucrative. They are offering very high returns, which can be lowered very easily. Currently, 70 to 80% of the buyers in the Middle East Sukuk are Westerners. Foreign entities issuing Sukuk, there are two examples in this slide. Saxony and Halt in the state of Germany, which raised 100 million euros worth of Sukuk in 2004. And by the way, their pricing was very small, very appropriate. Their price was just a little bit more than the EBOR at that time. Whereas the same state, when they were using the conventional financing, was raising similar funds at a much higher interest rate that they were paying. So the state found that this is much more easier. But other Sukuk that have been issued after that, they usually gave higher returns to the investors. Another example of a foreign issuer is the East Cameroon Gas Company, $165.67 million Sukuk in 2006. Malaysian Islamic Sukuk share of total private debt securities market increased from 42% in 2002 to 71.5% in 2005. This chart is showing Sukuk issuance by year, from 2001 to 2003, 2004, up till 2007. This is the old data. I will show you in a minute the new data. The brown ones are the corporate issues, and the blue ones are the sovereign issues. We can see that the proportion of the corporate issues has grown quite fast between 2005 and 2007 as compared to the sovereign issues. And many of the innovations in the Sukuk structures also came between that era of 2007, between 2006 and 2008 basically. This slide is showing the sovereign Sukuk by type and cumulative issuance from 2001 to 2007. Those of you who were present in my first lecture in this lecture series, I have shown this slide earlier as well. It shows sovereign issues categorized by, from left to right, from short-term Sukuk to from left to right, non-tradable to tradable, from fixed return to variable return. This is how they are arranged. For example, short-term Ijara Sukuk are here. Ijara Sukuk are here which are tradable and which can be fixed return as well as variable return. Mudarba Sukuk, they are definitely tradable and they are variable return. Musharaka Sukuk are variable returns and tradable. Similarly, Sukuk, short-term Salam Sukuk based on Salam contract, they are non-tradable in general because Salam contracts are non-tradable. They become debt as soon as you have paid the price. So this is how I have arranged them, and you can see that most of the sovereign Sukuk are in the middle. Most of them are Ijara kind and less of the other diversified kind, as compared to this slide which shows the corporate Sukuk issued, cumulative issuance from 2000 to 2007, again using the same approach, from non-tradable to tradable, from fixed return to variable return. We see that very little of Ijara Sukuk have been issued. Cumulatively from this 7-year period, most of them are Musharaka Sukuk or unspecified and non-Sharia compliant Sukuk. Unspecified Sukuk are usually the Sukuk that are that Malaysian market is issuing based on Mudarba, based on Murabaha, and Sharia non-compliant BPA and ENA based Sukuk are also because they are claimed to be Islamic part of the Islamic capital market. So I have not excluded them, but put my own definition that Sharia non-compliant BPA, ENA or other Sukuk. So the point is that we can see that by this line that in case of corporate Sukuk, most of the Sukuk issuance have been on the extreme ends of the tail, whereas in the previous graph it was in the middle. If you are familiar with the distributions, probability distributions, this is a kind of more risky distribution or fat tail distribution kind of thing, in which we can say that there are more innovations in types are taking place in the corporate sector Sukuk issuance as compared to in the sovereign Sukuk issuance, which are more concentrated in the middle as compared to in the private Sukuk or the corporate Sukuk, which are in the extreme. More experimentation has been is going on in the private sector. Now coming to what is the situation in 2006, 7, 8 and 9. Total Sukuk issuance in the US dollars in millions. I'm comparing only the first half for the year 2006, 2007 and 2008. The reason is that when this graph was made, this is taken from a publication by Beard Charles. When the chart was made, only the first half of the 2008 was available, so that's why we have compared them only the previous years also on the first half of the previous years as well. So you can see that the growth of Sukuk issuance, total Sukuk issuance, whether corporate as well as the sovereign total, grew from 2008 first half to 2007 first half. It grew from 2006 first half to 2007 first half, but it declined from 2007 first half to 2008 first half. This may be because of the financial crisis. It may be because of other reasons as well, but most probably because of financial crisis, because now when we have 2009 data, we see even less amount of less number of issuance. No, the fatwa has not affected that much on this issuance, because the issue, there was a Sharia issue that more 85%, for example, of the sukuk are non-Sharia compliant when this was said. This statement is pertinent to most of the musharaka sukuk and mudarba sukuk, not only ijara sukuk. Most of the ijara sukuk are Sharia compliant. It is the musharaka sukuk and mudarba sukuk, the new structures, in which there are elements which I will talk about, which are non-Sharia compliant, and so it may be part of it. I cannot say that this is not the effect, but looking at, can we open this camera? Because there is one slide or two slides which are not available on this computer. I only have data on my hard copy. Anyhow, as soon as the camera is ready, I will show you that. But the point is that the financial crisis has definitely affected the sukuk issuance market, and why not? It's very likely that it will be affected, because, as I told you, that most of the buyers, more than 50% of the buyers of the sukuk, were the conventional institutions, which are affected. So there is no demand, and even those who are issuing the sukuk in the Middle East or in the Malaysian market, they also face difficulties, that because the markets are interlinked. It is not that something will be one market will be affected, the other market will go scratch free. So this data is showing 2008 sukuk issuance by region. This is the total of the GCC issuance, and this is the total of the Southeast Asian issuance in amount, as a percentage of the regional market, as a percentage of the global market. One thing that is obvious is that in the previous graphs or in the previous studies, we have the data which shows that during 2007 the GCC countries were issuing most of the sukuk. They took a lead over the Southeast Asian market, Malaysia, Indonesia, and that region together. But in 2008, as you can see, that even in 2008, the GCC issuance in total amount is greater than the issuance by the South Asian countries. This is the data, sukuk issuance by region, but for the first quarter of 2009. And you can see that in this scenario, the GCC issuance is just in the first quarter of 2009 is 73 million, whereas it is much more in the Southeast Asian region. So in effect, the sukuk issuance market have been severely affected in the GCC region after the crisis, and part of the reason is that most of these sukuk, they were going in the GCC region for big infrastructure projects, which were real estate projects, and real estate market has been affected, so no new issuance is taking place. Now coming back to our slides, I'm moving away from the camera and going to